This is Matthew Cratter from Trade University, and today I want to answer the question, why is Bitcoin so dead in the water? Why is it just trading within this range in a very choppy manner? This is a question I've been getting from a lot of you, and it's surprising that Bitcoin is dead in the water, according to this question, when we have all these things going on. We have soaring inflation across the world, even in the US. We have war in the Ukraine, and we clearly have the need for a neutral, non-politicized money. We saw what happened with the GoFundMe fiasco with the Canadian truckers. We saw how the Russian FX reserves have been frozen. And so with all of these in effect, it's surprising that Bitcoin has really been trapped in this trading range. It's been trapped somewhere between 30,000 and call it the high 60,000s, really since the beginning of 2021. Now, this situation reminds me of something similar that happened with Amazon. So here's an article from October of 2010 talking about the Amazon stock bubble, talking about how Amazon has basically gone nowhere for an entire decade. And the question the article asked was, if the internet is clearly here to stay, and a lot of people forget that in the early 2000s and even up until 2010, there were debates about whether the internet was going to go away. This seems absurd at this point, in the same way that there's still people saying that Bitcoin's going to go away. But the argument here in 2010 was the internet is clearly here to stay. Amazon is clearly one of the big winners. So why has its stock been dead in the water for a decade? And I remember talking to a lot of people about this in 2009, 2010. We can see here Amazon on a split adjusted basis was trapped somewhere between $100 a share and call it $10 a share from 2000 to 2010, and then something amazing happened, and that early decade looks just like a blip at the lower left side of the chart, given the appreciation that has happened since then. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few friends as well. So it's important to realize that financial markets, stocks, bonds, futures, currencies, financial markets are always forward-looking. They're always trying to price in things that have not yet happened, or at least price in the relative probability of them happening. You see this often happen with stocks, where a stock will run up going into earnings. The stock then reports really good earnings, and the company reports really good earnings, and yet the stock goes nowhere because it is already priced in those good earnings. And that's what we mean by something being priced in. We mean that the market price has moved to where it should be. We saw this at the beginning of this year of 2022 with crude oil moving up and stocks moving down for weeks before the Ukraine invasion. We can see here that crude oil prices have been really moving up. We're moving up since December of 2021. And then the invasion of Ukraine was right here, I believe, February 24th. So we already had this beginning to be priced in. We did have a spike then that seems to be being worked off at the moment. Similar thing happened with stocks. They've really been selling off since the middle of December. And we now know some of the reasons for that. We now know that the Fed has been very hawkish about tightening, and we also know about the geopolitical tensions that are happening in Ukraine and other places. So markets are forward-looking. They try to price these things in. So what's happening with Bitcoin? Well, Bitcoin has been sniffing out the coming reduced liquidity from the Fed. It's been beginning to price in a more hawkish Fed really for over a year. We can see that Bitcoin first peaked in, call it March of 2021. It did make a marginal new high in November, but immediately snapped back into the trading range. This looks very similar to what happened with growth stocks, with momentum stocks, and the ARK ETF, ARKK, is a good way of looking at this basket of stocks, or this type of momentum or growth stock. It really peaked in February of 2021. So very similar time to when Bitcoin peaked. And these are both liquidity indicators. Bitcoin's an even better liquidity indicator simply because it's more freely traded and more globally traded. But it's interesting that these things peaked. And I have spoken about the growth stock and Bitcoin correlation in past videos. Short-term correlation means nothing for long-term results. And as I pointed out in that video from a couple weeks ago, Pets.com and Amazon were highly correlated in the late 90s and going into 2000, and then one of them went bankrupt. The sock puppet company went bankrupt. Amazon, as we've seen, went on to do really well after that. So short-term correlations come and go, but we really have been seeing growth stocks and Bitcoin trade as canaries in the coal mine for Fed liquidity. And we've seen for much of 2021 and all of 2022, this is a chart of the 2-year Treasury yield, which has been moving up. And so this has been the backdrop of liquidity being sucked out of the system, the money printers slowing down as part of this. So I think we need to approach this the same way that one would have approached Amazon. And this is how you have to think about long-term investments. You don't look for one-on-one movements with the news, but what you do is you look at the fundamentals. If you're trading momentum, if you're doing short-term trading, which I also cover in my courses, that's a completely different thing. But if you're a long-term holder, it's very important to know what you hold, to understand what you hold, and to understand the fundamental value propositions of what you hold. So what are Bitcoin's fundamental value props? First one, it's obviously hard money that can never be diluted. There's only 21 million coins. A lot of those have been lost. Satoshis are locked up. So there's probably more like 15, 16, 17 million coins. These can never be diluted. Unlike stocks, stocks can be diluted by further share issuance. Gold can be diluted by surprising new finds of gold. The U.S. government can obviously issue unlimited treasuries as well. And as such, it dilutes its ability to pay back bond holders over time without devaluing the currency. Unlike all of these assets, Bitcoin has this very firm monetary policy, and it has this max supply. It's really the scarcest asset in the solar system. In addition, number 2 value prop, Bitcoin is neutral, permissionless money that cannot be censored. Doesn't run on AWS or Infura like Ethereum does. Doesn't run on the US on the US Fedwire, and where you can the authorities can freeze accounts, etc. Bitcoin is neutral, permissionless, cannot be censored. No one can stop you from sending your Bitcoin to anyone in the world. So these are the 2 fundamental value propositions for Bitcoin. These are both still true. In addition, all the metrics for Bitcoin are looking quite good. So we can look at the most important thing for Bitcoin is the network effect. Are more people holding it? Is it being used more? Is it gaining more global awareness? One way of thinking about this is we can look at the number of Bitcoin addresses with a value of more than 0. So we don't want to look at Bitcoin addresses that are empty. We can see here that the black line is Bitcoin's market cap, obviously moving up over time. And the solid orange line is the number of Bitcoin non-zero addresses. And so that's been moving up over time. The dotted line here is a power regression of Bitcoin non-zero addresses. So Bitcoin adoption continues to move up and to the right, and this is very important to see. Something very similar happened with Amazon as well. And so if you understood Amazon's network effects, if you understood the genius of Jeff Bezos, and we're thinking about if we were evaluating Amazon stock in early 2010, after a decade of going nowhere with a lot of volatility, if we understood that Bezos was a genius and was really committed to the business, that Amazon had all these network effects, that there are all these coming verticals like groceries, prescription medicine, and then the really big one, the exponential growth of AWS, Amazon Web Services, then you knew that it made sense to hold on to your Amazon stock. Maybe it wasn't a good trade, but it was definitely a good investment if these fundamental value propositions held true. Now, Bitcoin is in a similar place. We understand that it's permissionless, it's censorship resistant, and it cannot be diluted or debased, which is very important in the context of this world where countries and corporations are trying to censor free speech. They're trying to stop the movement of money, and they're trying to freeze the money of people they don't like. So this really shows how early we are still with Bitcoin. There's been no flight to safety with Bitcoin. Bitcoin has moved down with stocks. Market doesn't understand yet that Bitcoin is a safe haven and risk-off asset. It's also a risk-on asset. It's just a good place to be no matter what because of these 2 properties of being non-debasable, and uncensorable. Market doesn't understand as well that the world is experiencing its first global sovereign default in the modern era, where we have all these governments highly levered and in a position where they can really never pay off their debt. They just have to issue more debt to pay off maturing debt, and they have to have their central banks buy up a lot of this government debt in order to monetize deficits. This is not yet priced in to the market. And because the way debt compounding works and GDP works, it's clear that the current fiat financial system cannot be saved. There's a monetary reset underway, and it remains to be seen what will be the new standard. Will it be a basket of currencies? Will it be Bitcoin for the new standard? But this is where we can see that we're heading. Wayne Gretzky always said you got to skate to where the puck is going to be, not where it is now. And this is where the puck is headed. It's headed to monetary reset. And if you understand this, you're not going to be selling your Bitcoin just because it's been dead in the water for a year. None of this is priced into Bitcoin yet. We are still very, very early. Bitcoiners understand the value prop, the fundamental value prop of Bitcoin, but that is still just a very small percentage of the world's population and the world's investors. How many people sold their Amazon stock in 2010 because they were sick of it being dead money? Probably quite a few. So the question remains, is Bitcoin a hostage to Fed monetary policy? And I would say yes in the short term, at least for now, it is. We saw something similar in 2018 and 2019 during that tightening cycle, where especially as we got, the Fed got tighter and tighter, it was very bad for Bitcoin. Bitcoin ended up entering a bear market and being trapped really between, call it $3,000 or $4,000 of Bitcoin and $20,000 of Bitcoin. And then, of course, after a couple of years of choppiness and sideways action, we have a new, basically Bitcoin reset at a higher level. So you can think about Bitcoin as trading, having these sideways periods, and it remains to be seen. These seem to have been driven by the halving cycle in the past. This may or may not be true going forward, simply because the new coins mined are so small compared to the float or the existing supply. So Bitcoin goes through these sideways periods, then it goes through periods of revaluation, and then it trades at a new level. And so that's where we currently are. No one knows when we're going to break out of this. I think we do break out of it sooner rather than later. I'd be very surprised if we're not at 100,000 by the end of the year. But if you understand Bitcoin's value prop, you are grateful for this continued opportunity to accumulate Bitcoin at these sort of very low prices. Every few years, Bitcoin adds a zero to its price in US dollars. We can see this if we go back to March 15th in 2012. It was trading at $5 a Bitcoin. A year later, it had added a zero. A year later, it added another zero. It was sort of trapped in the hundreds of dollars for 3 years, and then it was trapped in having four figures in the thousands of dollars from 2017 to 2020, at least in terms of the closing price for this year. Obviously, a lot of volatility in between, including hitting new highs. And now we're in this period of five-figure Bitcoin. Pretty soon, I don't know when. I honestly don't know when, but Bitcoin will add another zero, and it will be in the hundreds of thousands. And you'll still have people saying that Bitcoin is worthless. You'll still have people saying it's going to zero, or that it's in a bubble, or that it's overpriced. But if you understand what is fundamentally driving Bitcoin, it's this unique digital commodity that's extremely scarce, that can never be reproduced. The altcoins are just copies. They're fool's gold compared to Bitcoin. They don't have the same decentralization. They don't have the same monetary neutrality as well. So if you understand this, it'll help you to better survive the boredom and the volatility of this sideways chop and this trading range. So I'd encourage you, if you understand these things, if you've done your research on Bitcoin, keep accumulating Bitcoin. Try to buy a little bit every day. Keep dollar cost averaging. And don't be one of those people who come to me when it breaks to new highs and say, am I too late? Should I be buying it? I think Bitcoin's obviously going into the millions. So even when we break up to 70,000 or 100,000, it's not going to be too late. But this is just a huge opportunity to buy Bitcoin at nearly a 50% discount from from the highs. And so to participate in this new monetary technology. There are a lot of people who missed out on Amazon in 2010 just because they were looking for a little bit more of a dopamine release and volatility and excitement. And it turned out that just holding Amazon for 10 years, the really boring trade, made huge multiples of their money, much better, much more money than they could have made trading in and out. And I think Bitcoin's the same thing. It's a buy and hold asset, and it's going to continue to do really, really well in the coming years and the coming decades. Nothing has changed with Bitcoin's fundamental value prop, and the Fed is going to need to reverse course probably in a few months from now after they blow a few things up. They simply cannot tighten monetary policy too much without really crashing stocks and even crashing bonds. And someone's going to need to buy all that debt that's being issued by the US government because of all this deficit spending. So nothing has changed on the fiscal side of things for the US government. Nothing has changed on the monetary side of things. And Bitcoin remains Bitcoin. It's one of the few unchanging assets in the world. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.